Right now, single best chart. David Kelly with us at JPMorgan, and Herm Bandholz has been more than patient here on single best chart, which is just euro weaker. We showed this chart earlier. Euro down today. This is on no news out of Brussels. They're not going to budge, etc. But Herm Bandholz, this goes to, again, the major call of the year, which has been dollar stability and indeed dollar strength as well. Have you had to adjust your dollar call?
Yeah, actually, we had expected even more dollar strength because until recently we thought we'd get 2 rate hikes by the Fed. So we dialed that back a little bit on the back of latest Fed rhetoric and what was going on in financial markets. But we still have 1 hike left in our forecast for this year. Because we don't see anything on the ECB side in terms of tightening, if you want. So we think euro dollar could go towards 110. Before the middle of the year, but then it begins to weaken probably because, as we talked last time, we think the U.S. economy will at some point be the
join
lead,
everybody else in need.
It will actually be the leader of the global slowdown at some point.
Have you ever walked through the appropriate euro value for your Germany? Have you ever? I mean, we did this with Volkers Landau, Deutsche Bank on Italian lira. Have you ever figured out where the euro would appropriately be for trade surplus Germany?
Higher.
Okay, let me turn to Dr. Kelly here right now. Can you give me a more clear answer than the wise guy from UniCredit?
No, I think obviously, I mean, Italy would be one place, Germany would be another place, and if they didn't have a single currency, but they do have a single currency. But I think on the dollar, I agree that at some stage the U.S. is going to slow down. The U.S. has had very unusual fiscal stimulus in the 10th year of an expansion. Nobody else did that. It's very unusual. And that allowed us to move ahead from the pack. It also allowed the Federal Reserve to be more aggressive in terms of tightening. But that lead is going to be diminished in 2019 and 2020. And when that happens, when the U.S. slows the rest of the world, when the Fed stops raising rates, and I actually think that the Fed may not raise rates at all this year, I think the dollar will begin to weaken, and the dollar does need to weaken in the long run. So it's very hard to make a short-term call, but over the next few years, I still think the dollar will come down.